Here's Steve Rhodes.
Good day, traders. Hey, folks, this is your host, Steve Rhodes, coming to you live from the TFNN radio and television network. That's right, television network, folks. Go to the main page of TFNN and click on the link to go live on Channel 1, and you can watch this show live. The beauty of that, folks, is that if you're just trying to learn technical trading, I will teach you something. I will absolutely teach you one or two things during this hour. You can follow along with my charts, and you can call me. You can give me a call. We can take a look at a stock that's in your portfolio, maybe something it is that you're taking a look at trading, whatever it is, and I will give you, my best opinion of what the market is communicating to us technically. And folks, I absolutely love being here with you. So much so that now we've expanded my ability to spend time with folks like yourself from 2 hours a week to now 7 hours a week. So if you're just tuning into the Trader's Edge show, Tom and I do a show now from 10 to 11 each day, Monday through Friday. And so you've got 7 hours of programming. For me, it's great because what I love to do is I love to teach. I love to help people grow. And I love doing this. And, I really appreciate, I really understand the value of your time. I will make this so worthwhile for you and just honored with your presence here today. And I am absolutely grateful for the opportunity to serve you. So let's go take a look at the markets and see what it is that we have going on there. Because what I want to show you is maybe, our first lesson of the day. And you listen to me and we talk about these different Fibonacci areas, which are our floors and our elevators in the building. And when I take a look at the stock market, if you will, if I'm taking a look at a chart, what I'm looking at is it's continuing to, create buildings. And the buildings, when we take a look at them, folks, are stretching in between the foundation, the bottom, and the and the penthouse suite, if you will. And if you take a look at that, what I've got up on my chart right now is the S&P 500. And we're just going to first take a look at the building that was built that goes from the July 18th time frame. And the low that we have there, folks, is 1295. And the top of the building was at 1347. Now, what the market has done is it's come back. And you can see that for a period of 3 days, as it was coming down off that penthouse, it was just kind of moving sideways. And it got to the first floor. So there were some people that were riding the elevator down. Typically what happens is you get off at the first floor. The first floor would have been the 0.382. That's 38% of coming back of that area of the difference between 1295 and 1347. If you took that value difference and subtracted 38% from it, you'd come up to 1327. Well, the way that the floors work on the elevators inside the buildings of technical analysis is you basically have 3 floors that we're going to first talk about. And that's 0.382, 0.618, 0.786. So I look at it as floor 3, floor 6, and floor 7. Now, typically you get to floor 3, and then what you do is you stop, and maybe somebody wants to go back up or towards that penthouse suite again before more people come on, or fewer people, and they come down maybe to that 6th floor. In fact, if you were going to visit us here at TFNN, you would come over to the building. We're on the 6th floor. How about that? Suite 618. Absolutely wonderful. Now, when you're taking a look at these charts, yesterday's action is so important because what happened was you had all kinds of people pile into the elevator on the 3rd floor, and they decided not to stop and see Tom and I here at TFNN. We were disappointed. We were hoping that they would stop at that 6th floor. But no, what did they do? They went all the way down, or they went all the way up to the 7th floor. They went to that 0.786 area. The 786 area was actually 1306, where the market closed. It closed yesterday at 1304. The low on the S&P was 1303.49. Now, you can see that is that 0.786 retracement. Let's see what it did when it was on its way back up. So now I'm going to go to the swing point here from July 7th when the market made a high. The high there was 1356, and I'm going to come all the way down again to that swing point of July 18th. And, in fact, let me just to make it a little bit easier. Whoa, I don't want to do that. Let me see here. There we go. Let me do this here. I just want to make it easier for you to read. Let me get rid of these lines right here. So you can see on the way up what we did was we did about the same thing. We came up to the 0.786 area. We hung out there for basically 2 days and said, see, you don't want to be you, and it moved down. Now, when we go take a look at the actual, because I don't have volume that I'm showing here on the S&P chart, but I want to show you here we have, so we're kind of in between these two 0.786 retracements on both of these moves. And so right now today we're trading above it. If we go take a look at the SPY, so let's go take a look at the volume that we have out here. And on the SPY chart, folks, what I actually have out here shows one of the patterns that I'm taking a look at. But I'm going to go ahead and delete this because we can come back and I can even show you how to create a Gartley pattern, because that's what I was showing. Now, what I want to show you here is I want to show you this swing point, the swing point from July 18th. And what you can see is the volume that we had there was 196 million shares. Now, what we did yesterday was we came into that swing point with 247 million shares. What that typically tells you, and you can see right now today, we're trading right at the top of that swing. The top of that swing on the SPY is 131.28. We're trading at 131.30. So it is struggling to get over that. If it was going to get over that, you'd want to be able to see it do that with volume. And the volume there mean more than 196 million shares on a daily basis. What we've done today is we've done 67 million shares. We're now an hour and a half into trading. Maybe somebody in the den can help me out with the math on that one. But, even if it's about, let's see, 190, 67, maybe it's going to be about 180 million share a day, something like that, give or take. So you got similar volume to what we had yesterday. Now, you would expect similar volume or potentially more volume on a Thursday because we're in the dead of summer, and we're starting to move. It's hard to believe that we are almost into August. So July is gone. August is upon us. Pretty soon, kids are going to be going back to school, and everybody will be back to work. And so this swing point, where the S&P closes today, will be important to understand, both from a volume standpoint, and are we rejecting this swing point, and are we going to move higher? But because we came down into it, it's giving us a signal that we're going to come down and we're going to at least test it. What you really want to see, the better trade that would be out here on the SPYs if you were going to go long, and you were just taking a look at volume swing point analysis, what you would be looking for, you'd want to see it test the bottom. The low on that was 129.63. We didn't get down there. I say you be patient today. Today is a day of patience and pause, and take a look at the market, see if there's any other type of signal, especially when we have such uncertainty going on inside Washington, and that seems to be impacting the markets. Now, what also is important to take a look at up here is this candle right here on the chart, and that is the July 5th time frame where we had this little gap between the close or the high that was made on July the 6th, as well as we gapped down on July the 8th. And what this created here was that created an island reversal candle. We got up close to it. That candle there, folks, had 169 million shares, and we were coming up into it with 248. And apparently what happened is our boat got up there, our cruise ship got up there, folks tried to swim out there, get on it, and move out. I thought, folks, we were coming to a party. Everybody was coming to that island for a party, but not so quick. So, we don't have any clarity, in my opinion, when I take a look at volume, I take a look at these swing points, other than this candle, while it still remains an island, is a very negative, a very bearish candle pattern. Now, what I was looking for, if we just continue with this uncertainty in Washington and the markets continue to trade lower, what you'd really be looking for here, and you could easily see this happen with the volume that we had yesterday, and more so, not so much the volume, but this big candle. Look, we had a gap down, and we had this big wide range bar. So when I take a look at this candle here, folks, what I'm looking at is really from about this point down. So you had a big wide range bar. That usually means lower prices to come. And what I would really like to see at this stage is I would like to see lower prices to come. I would like to see the SPYs get down to the 128.75. That would make a 1-to-1 ABC. What I'd really like to see is I'd like to see it get down there on lighter volume, lighter than that 196 million shares, because what that would set up a Tiger Gartley. So as we were talking about our floors here, I'm going to go back to the swing point of June 23rd. The last time that we made a low there was 126. We had 333 million shares. So you had nice volume coming in there. What you can also see is the top, that 128.75, gets very close to the top of that candle. The top of that candle is 128.64. So if we get to 128.75, we can get to 128.64. You'd love to see it get to the top of that, come in there with lighter volume. What that does is that sets up a Gartley buy pattern. And the Gartley buy pattern, I'll just show you what that looks like here, folks, is that looks like this. I'm just simply going to draw it on my screen here, going to color it in a little bit. And so what you can see is you can see these numbers here. Maybe you can see this 1.17. What that is, folks, that's the expansion of this to this area. So of the low here of 120, let's see, the low of 129.63, all the way up to the high there of 134.82. Now, if you took that dollar difference and you multiplied it times, in this case here, 1.17, it would give you the D point that we've got there. Instead, what you want to use, there's other, just like we had those 3 floors, if we were going to build the building and continue to expand the building, in terms of technical analysis, our expansion, we get up to that our top level, which we call the penthouse floor. The next level that we would build would be 1.272. And then the level after that would be 1.618. And those are, so there's really just 5 key numbers that you need to remember. So what you can do with your tools, if you have some Fibonacci expansion or retracement tools, is go take a look at the swing points and draw what the expansion is. So you can see the expansion of 1.272 would be 128.22. Maybe it's not that easy to make out on my monitor, but it's 128.22. So our range that we would be looking to get into a trade, if you wanted to go long, you'd be looking to come into the swing point of June 23rd on lighter than 333 million shares. You'd want to, as your trading range for entry, you'd want to be targeting the 128.22 to 128.75 because that's a 1-to-1 ABC. You'd love to see us come down here on lighter volume, and it's possible to certainly do tomorrow with it being a Friday. But, you know, with such uncertainty going on out in Washington, you know, we're just going to have to wait and see what the markets tell us. Right now, you know, we've got this 0.786 area. Until we get above the swing, we're trading above it right now, until we get above the 131.28, there's really not too much that you can do because the reward to risk just isn't in there. Now, if we go take a look at some of the other markets that we have up here, let's go take a look at, let's say, the strongest market, which would be the Qs right now. Even though the Qs had a tough day yesterday, you can see they really came down with volume. They came down with 83 million shares, and it got into the swing point. It got into the July 14th swing point. Now, here's the cool thing. It got in there on lighter volume. The volume it was coming up against was 98 million shares. Now, when you close into a swing point on lighter volume, it does mean that you continue to go a little bit lower. But what we've done right now is we've rejected that swing point. So that's giving us some information. We were coming down there with volume. We also, the other thing that was out there that is a little concerning is I would have loved to have seen it fill the gap yesterday. The gap there, the high is 57.79. We didn't get down there. Folks, our call number is 877-927-6648. Give me a call. We'll take a look at whatever you'd like to look at, folks.
Look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
Purchase Tiger Dollars during the month of July, and you will be automatically registered to attend Tom O'Brien's one-day live webinar, 5 primary core techniques to become a master trader at no additional charge. Your purchase of Tiger Dollars is the only way to gain access to this exclusive webinar. The one-day webinar will be held Monday, August 8th from 8 a.m. till 3 p.m. The course will also be archived on your members page for you to view at your convenience. Go to the front page of TFNN.com under Breaking News and order your Tiger Dollars now.
Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 2,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the fourth quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York Stock Exchanges under the symbol GBG.
You've heard Bud Rolfs give his expert technical analysis of the stock market on the radio. Now you can have his superior trading advice and his best stock picks delivered right to your desktop every week with his newsletter, The Torch. Using his own trademarked Warpath trading system, Bud will help you to increase your odds of making and saving money in the markets with powerful stock selection, stock analysis, and trading plan strategies. Published every Monday morning, each issue of The Torch features full-color charts in an easy-to-follow format. You will also receive not only the big picture of what's going on in the major markets and critical sectors, but also featured stock picks with complete trading plans and technical setups, as well as the Subscribers Corner, where Bud analyzes stocks submitted by subscribers. Visit tfnn.com today and receive your 2-week free trial of The Torch. That's a $75 value. Sign up now and make sure you receive all the great market analysis and winning trade ideas in every action-packed issue of The Torch from Bud Rolfs.
TFNN introduces Tiger TV. Tiger TV brings you video content to help you succeed in the financial markets and beyond. Investors and traders can get in-depth information, news, commentary, and education for investing and trading equities, options, commodities, forex, futures, and more. Just go to TFNN.com and click Tiger TV and select your favorite channel from the carousel on the left. Grab a popcorn and get ready for Tiger TV, a great new service from TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is, folks. Welcome back. This is Steve Rhodes. This is the Trader's Edge, and thanks so much for spending time with me. Our call number here is 877-927-6648. And let's go to our man, Bob from Colorado. Bob, you with us?
Yes, I am, Steve.
Hey, thanks for calling in. Nice to hear from you.
Nice to talk to you.
Great, great. You wanted to look at the QLD, is that right?
Yes, sir.
Yeah. You know, what I'm looking for here, you know, the QLD, folks, right now it's trading at 68.70. I'm sorry, I'm looking at the Qs. So Bob, when I take a look at the QLD, which is the two-time ETF for the Qs, you know, I take a look at the Qs just simply because I make my trades based on what's going on with the Qs. So I've got that up on the screen first. And we were talking about how yesterday, just before we went into break, we were talking about how yesterday we came into the swing point from July 14th, and we came in and we tested it with lighter volume, but we closed, you know, inside it, so we didn't reject it. Now today, you know, it has rejected it, if you will, but the way that I'm looking at probably playing this is not going long here, but waiting to see what happens when we get up, when we're taking a look at the Qs. I'm waiting to take a look at the 59.29. This is where the high of yesterday's candle was. And we have, I think we have a little bit of a gap out there. The close was from the day before, July 26th, Bob, was 59.32. So we do have a little bit of a gap. We've got about a 4-cent gap, 3 or 4 cent gap up there. And I'm waiting to take a look at what the volume is as we get up there. Right now today on the Qs, again, we've done 20 million shares. If we take a look at yesterday's candle, it was 83 million shares. You know, today will give us some type of signal as to what's going to go on. Now, if we go over on the shorter time frame and I take a look at the Qs, you know, we were talking about the 0.382, the third floor, the sixth floor, the seventh floor. And what I've got this on, folks, is I've got this just simply on a 5-minute chart right now. And this is going from the high of yesterday, July 26th, the high out there right around 59.83, down to the low that we made this morning at 57.89. And at 9:45 this morning. Now, if you're looking at my chart, Bob, one of the things you can see is you can see how we've got basically no volume as we're pushing up here. Okay, you know, although it's just a 5-minute chart, it's moving up for sure. But the better trade on this is going to be as we get closer to that gap, in my opinion, at this stage. So we're looking at whether that's going to be right around the 59, 53 area to maybe the 59, where's the high there? The high is 59.29. So to me, that's the better play. That's going to be up close to that 7th floor. So we're trading at 58.83. You know, we're looking for it to get about to 59.41. So that's my take on the Qs. I don't see a good entry point at this stage on the QLD.
Well, and that was kind of what I surmised. It looking at the QLD, Steve.
Yeah.
Looks like to me we had a Gartley pattern, and then it failed yesterday, and this QLD will morph into a butterfly. Am I correct with that analysis?
Well, let me pull that up here for you. Okay, so when we're taking a look at the specifically at the QLD, folks. All right. Now you were looking at yesterday, and you were looking at this on a daily chart.
Yes.
Okay. So on a daily chart, I don't see a Gartley pattern yesterday. I just simply see a retracement down to the 0.786 area.
Okay, I guess that's part of my learning curve.
Yeah.
So the Gartley has to be a form. You can't look at it on a daily basis. You need to look at it.
No, you absolutely can look at a Gartley on a daily basis. Let me go back here, and just for the heck of it, let me go ahead and pull up the IWM, okay, which is the small caps, because yesterday what the IWM did was the IWM came close to actually setting up a Gartley pattern. So here, Bob, if you're following along on TigerTV or you're looking at it,
yes,
okay,
I am.
All right. So on the Gartley pattern, what you've got here is you've got an AB equals CD, okay? And you can see that just simply the A to B equals C to D completed on the IWM at 79.34. The low that we got down to yesterday was 79.85. To me, still a little bit too much distance, although let me take a look at the expansion of the swing point here. It was up 1.5. So, you know, we actually made a version of a Gartley yesterday. It wasn't the full A to B equals C to D, but this was where we would really be taking a look at possibly going long, because this would be a Gartley buy. The problem there is you have to have real caution because of this wide range bar that we had, because we crossed the B point yesterday on the IWMs with much more volume. We had 56 million shares from July 18th. Yesterday we crossed that with 97 million. Typically that means you're going to do more than a one-to-one extension. I hope that helps, Bob. Thanks for calling in. I appreciate it, and we'll look forward to speaking to you again. Folks, 877-927-6648. Give me a call.
Yeah, it's always better when we're together.
Tom O'Brien's daily newsletter, Market Insights, has recently been capitalizing on a trader's market, which is why now is the perfect time to get your 2-week free trial to take advantage of the volatility and swings that provide opportunities that traders dream of. With trade setups in equities and options, you can see how Tom O'Brien uses his years of market knowledge to take advantage when trades are presented with price projections and trading stops on each recommendation. Log on to TFNN.com today and click on the newsletter tab to get your 2-week free trial. And don't forget, if you purchase any amount of Tiger Dollars this month only, you'll gain access to an exclusive live full-day webinar Monday, August 8th with Tom O'Brien. Tiger Dollars never expire and can be used for any of our products. You cannot sign up for this exclusive webinar. The only way to gain access is by purchasing Tiger Dollars this month only. Act today by visiting TFNN.com.
Win free silver all summer long during our Great Panther Silver Summer Silver Giveaway.
So let's go to our man, Dan from Reading, Massachusetts. Dan, are you on the line?
I am. I got a call that I won that Great Panther getaway.
Oh, good for you.
Yeah.
Hey. That's great. That's great. Did you believe you were going to be a winner?
I doubted it. I don't usually win, but pleased to win.
Starting Tuesday, June 21st through Labor Day, TFNN will hold a drawing once a day, 5 days a week, business days only. One lucky entrant will receive one of these beautiful coins.
Today's winner is Len Winograd from Hollandale, Florida. How are you today, Len?
Never better. I feel so good. I should be twins.
Congratulations. Beautiful silver coin. How long have you been listening to TFNN, Len?
I listen every day for the last 4 years.
Winning one of Winning these extraordinary coins could not be easier. There's no contest and no gimmicks. Go to the front page of TFNN.com for more information. Win free silver all summer long during our Great Panther Silver Summer Silver Giveaway.
Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Purchase Tiger Dollars in the month of July. Order Mastering Probability and receive access to Tom O'Brien's exclusive one-day live webinar. 5 primary core techniques to become a master trader.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. This is Steve Rhodes. This is the Trader's Edge. Our call number is 877-927-6648. Thanks so much for being here with me. And let's go to Marsh from Texas. Marsh, are you still there?
Yes. Hello.
Thank you so much for holding on. I appreciate it.
Hey, no problem. I was calling in about Baidu.
Yeah.
Ran away there for a little bit. I was thinking about the 145 level.
It is what a great stock, huh?
Uh-huh.
Now you said you're in it at around the 145 level?
No. I got out of it about that level.
Oh, you did? Okay. And
I think it's coming back to 125, but.
Well, I tell you, this thing, it took off a couple days ago, right. July 26th. What we did was it gapped up with 17 million shares. And when you take a look at, the market that we had yesterday, this thing came back down with 9.7 million shares. And all that it did today, folks, is it went back and it closed the gap. And typically when you have gaps in stocks, you will see them close. Now, when you have gap ups, sometimes if there's some type of significant change that has gone on fundamentally with the company, maybe it was a buyout or something like that, they don't always have to be tested. When it's just a normal gap up in price, what you've got, you typically will see those things come back and get tested. And that's in essence what it's done here today. Now, the beautiful thing about this stock is that if I just put this on a weekly basis, this is the type of stock that you want to be in, because right now, there are very few shareholders, if you will, that are not in the money. So it's got some real, you love to see stock charts like this. And so it had a little bit of a breakout on the daily basis. I'm not suggesting that you get in right now, but if you were in this stock, I would definitely suggest staying in here. Now, what it could be doing, if you take a look at Baidu, it could be making a new ABC up. Let's take a quick look at that. And what I'm looking at there, Marsh, I'm looking at the swing point of July the 8th. And if we take a look at the volume that we have there, July the 8th, we had 7.7 million shares. And when we cross that swing point, let's say we cross that, with 7.4 million, 8.4 the following day. So what this has done is this has confirmed an ABC up that would take you to 171.32 on this stock. You're trading at 160.174. And what it probably does is that probably sets up a butterfly pattern for us, and which would then at that stage, what that would do is that would create maybe a pullback that you would be looking for. And so actually there's the version of a butterfly pattern that really created a couple days ago, but I would wait for this to get to either to pull back to right about where you had sold in the 147 area, or wait for this thing to complete at 170.134 and then pull back from there.
All right, I appreciate it. Thank you.
You bet. Thanks for calling. Let's go to Nick from Florida. Nick, are you with us?
Hello there.
Great. Thanks for calling. What part of Florida are you from?
Titusville.
Oh, perfect. And you listen to us on the. Are you watching us on TigerTV?
That's right.
Hey, perfect. Thanks for doing that. And you wanted to take a look at silver. Are you in the silver contract? Are you short silver, long? Where are you at?
No, I'm looking to see if it should be shorted on SIVR.
Yeah, the short on this the short was yesterday. Right now, if I'm just taking a look at the daily silver contract, and we did 53 million shares. There's a swing point that is at July 22nd, and what we've done today so far through trading, we've done 43,000 shares. Did I say million? I meant 53,000 shares. So we're coming into that swing point here with volume. If we take a look at this on a shorter-term time frame, right now is not the time to go short. I would wait to see if silver would bounce from here. And I've got this, again, on a shorter-term time frame. I've got it on a 30-minute time frame. And it looks like we've completed an ABC down on that. Let silver bounce up maybe into the, let's see real quickly if I can get this before the break. It looks like probably you want to let this thing try to bounce back up to $40 before you short it again. Thanks for calling, Nick. I appreciate it. We'll be right back, folks.
Yeah, it's always better when we're together.
Launched in April, Ken Shreve's newsletter, Ultimate Growth Stocks, has had an overwhelming response, and his outstanding results have not disappointed. Using his unique method of combining a fundamental review of sales and earnings with technical charting for entry and exits, Ken is posting multiple double-digit percentage gains. This month only, you can lock in the low introductory rate of $395 per year. Log on to TFNN.com today to gain instant access to Ken Shreve's Ultimate Growth Stocks newsletter. TFNN and Tom O'Brien have announced a one-of-a-kind special for this month only. During July, if you purchase at least $500 worth of Tiger Dollars, not only do you get a 20% bonus, but you also gain access to an exclusive one-day online class with Tom O'Brien. Tom's live one-day webinar will take place Monday, August 8th, and of course will be archived if you can't attend or just want to review. Tom will focus on the 5 primary fundamental core techniques to become a master trader, and the only way to gain entry to this exciting one-day class is by purchasing your Tiger Dollars in the month of July. The best part about Tiger Dollars is you can spend them on a variety of newsletters and products we offer. Bud, Basil, Ken, Dave, Steve, Larry, Tom, or Nico, no matter your preference, they all accept Tiger Dollars for their services. Purchase your Tiger Dollars this month and don't miss out on Tom's exclusive full-day webinar. Visit TFNN.com and act today.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, Did you sell us jewelry, or did you buy coins off us?
Yeah, I sold you jewelry.
Okay.
Yeah.
Awesome.
What we waited at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make. TFNN introduces Tiger TV. Tiger TV brings you video content to help you succeed in the financial markets and beyond. Investors and traders can get in-depth information, news, commentary, and education for investing and trading equities, options, commodities, forex, futures, and more. Just go to TFNN.com and click Tiger TV and select your favorite channel from the carousel on the left. Grab a popcorn and get ready for Tiger TV, a great new service from TFNN.com.
Hi folks, this is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is for sale at Amazon.com for only $18.40.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is, folks. It is so much better when we're together. And we've got a new winner in our silver, Great Panther Silver giveaway. It's Stephen Tenenbaum. And congratulations to you, Stephen. What a wonderful way to start your day. I think we reached out to him. We couldn't get him on the phone. And folks, all you've got to do to win silver, which right now is trading at $39.51, and these are beautiful coins. All you've got to do is go to the front page of TFNN.com, and you can enter. Even if you've won, you can win again. There's no cost. There's no nothing. Just go ahead and put your name in there, enter. It's a great way, and nothing like going a little bit of silver. Now, just real quickly, since we talked about silver, I wanted to just finish up with Nick, because I was just kind of running out of time there. And one of the reasons why I was suggesting that Nick not jump up on a shorting silver trade was because if you take a look at the intraday chart, and what I have pulled up here, folks, this is a great lesson with regard to how sacred geometry works, how these numbers works, and how you can use these as having your back up against the wall when you're taking a trade, when you're placing a trade. And so on a 30-minute chart, what you're looking at are those swing points. You're looking at distances between swing points. So first thing when you take a look at the silver contract is it's almost completed an ABC down. An A to B equaling a C to D would have finished at 39.24. Now you can see the steep decline that we had here on the A to B leg, and then we moved up to the C leg. You can see as we were coming down, we're on the right side of that line. And when you're on the right side of that line, it means the move is not as strong as it was on that first leg down. So to a certain extent, we've completed the A to B equals C to D on this. What we've also run up against is we've run up against that 0.786 retracement if you're taking a look at swings going all the way back to the 10:30 time frame on January 20th. If you use your tool from there all the way up to the high at 41.84 or 85, 46, what you're going to see is that would be the 0.78. I'm sorry, that would be the 0.618 area, apologize, which is $39. So now you're up against the 0.618. If you go back to another swing point here, if you go back to the swing point at 4 p.m. on July 22nd, all the way back up to the high, then what you've got is you've got the 0.786. So between two swing points, you've got, elevators, folks that have stopped at those floors. What you then can also look at is an expansion. So I want you to be able to do this, Nick, is if you take a look at the expansion from the 12:30 time frames, the swing point on July 25th, all the way up to the top, the 1.272 is also in this area. So you've got three sacred geometry numbers coming together. This is telling you that what silver should do from here is bounce a little bit. Now, what I gave you was a figure of $40. What I was looking there for was a dead cat bounce. That would be people taking the elevator up to that first level, which is the 0.382. That would be $40. Watch what silver is doing as it gets to there. That would be a dead cat bounce. That would be a spot where you could take a look at putting on a silver trade. So hopefully that has been helpful to you folks. Let's go to our man Ken from Iowa. Ken, how you doing today?
Good morning, Steve. Thanks for taking my call.
Oh, my pleasure. Always good to hear from you.
I'd like to have you take a look at MDT. I don't own it, but I'm looking for an entry point.
Okay. So if we're taking a look at MDT, folks, and what you want to take a look at is, as Ken, you probably already have, is taking a look at that March 16th swing point. The low there was 36.31. We did 7.9 million shares. What we did yesterday was we actually gapped down below that. But you gapped down below that with 7 million shares. So you didn't exactly, blast through that with volume, but you still are through that. Today, it's still trading below that area. As long as you're down below that level. Now, what it's also doing, Ken, is it's coming up against that sixth floor. So you would have expected the elevator to stop right there. And what's important is to watch this here for the next little while, because there's an ABC down, a one-to-one ABC down at the 33.37 area. What that also would do is, because you're below this swing point, where that would get you to, Ken, that would get you to the swing points back in November 29th of 2010. So what you would do is you would make a ABC down. You would also be making a longer-term Gartley buy pattern. And there where I'm taking a look at is I'm taking a look at that big volume area from August of 2010, folks. And if you take a look at that, would really set up a Gartley buy pattern. I'll draw that in here for you so that you can follow along. And folks, this is really a great educational tool for you to be able to go and re-watch this. My show is on Channel 14, so you should be able to watch the archive. You can see the chart, and you can learn there. And so, Ken, I would say at this stage right now, wait and let it continue to do its work while it's trading below this 36.31 area. And the ideal trade for you, for me, would be when it gets to 33.52.
All right.
All righty. Thanks so much.
Very much.
You bet. Thanks so much for calling. Look forward to speaking to you again. Now let's go to, we've got Louis in Naples. Louis, how you doing?
I'm fine, Steve. How are you?
I'm doing great. Thanks so much for calling in. I appreciate it. You wanted to look
sure.
at OVTI?
Yes, Omnivision. It looks like it's touching the 200 days moving average today.
Oh, okay. And are you in that? Are you in the trade?
Yes, sir.
You are, okay.
I'm taking a small loss, about 3-4%.
Okay. So that's not too bad. Now, here's a key question. Do you have a stop in place?
Yes.
You do. Okay, great. So now, if we take a look at this here, let's just take a look and see. Right now it's got a B point, which is your swing point from July 19th. There were 2.4 million shares. The low on that was $30.78. You're trading right now at $30.69. So you're trading just below that. There was 2.4 million shares. Yesterday you came down into it with 1.5. Today, right now, you've traded about 1 million shares. So we're, 2 hours into trading 1 million shares. It's still coming, it's still below that swing point and maybe on volume. So this could be setting up an ABC down. If that's the case, where this would run to the 29.96 area. Now, that may not be too bad because that actually could be setting up a buy pattern. Let me just do a quick retracement, going and taking a look at the candle from June 20th, all the way to where it made its most recent high on July 30th. And voila, look what we have here. The 0.786 retracement of that area is 29.85. And I mentioned to you, Louis, that the 1-to-1 ABC was 29.97. So, where's your stop on this?
It's around 28.79.
Okay, so what I would do on this trade here is I would go ahead and I would keep that. I would go ahead and keep that in place. You may take a little heat because if I were taking a look at possibly a trade setup on this, I might be looking at going long at around that 29.85. But I am a little concerned with this gap down from July the 6th on 8.1 million shares. But keep your stop in place, and thanks so much for calling. I look forward to hearing from you again. Folks, you can get in line, too, 877-927.
Okay,
you betcha. 877-927-6648, folks.
Yeah, it's always better when we're together.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit tfnn.com today. For some extra cash to help pay off some of your bills? Let Tiger Metal Exchange convert your unwanted jewelry to cash. We pay out 80% of the market price for gold. Our payouts are the highest in the industry, more than double our largest competitors. And we've created the safest, easiest, and most straightforward process for converting your jewelry to cash. Log on to TigerMetalExchange.com and get your free scale, your free eye loop, and get the cash you deserve now. We provide a free online calculator that converts your jewelry to cash at up-to-the-minute spot prices. We insure your items for up to $75,000 per shipment free of charge. We videotape the entire valuation process so that you can view it online. You can call us toll-free at 866-618-8888 or log on to TigerMetalExchange.com. Let Tiger Metal Exchange put more cash in your pocket without ever leaving the comfort of your home. Join the list of thousands of satisfied customers and go to TigerMetalExchange.com. It's the only click you need to make.
Tom O'Brien's weekly newsletter, The Gold Report, gives traders, investors, and money managers a thorough strategy for trading in the gold market. If you're an investor in gold or any of the gold mining equities, this newsletter is an essential tool that can help you become a better trader in the gold market. The Gold Report comes out every Monday with complete coverage of the entire gold market, including the XAU, HUI, the dollar, the bond, the rand, as well as more than 35 different mining equities. For the low price of $150, you will receive 13 weeks of the Gold Report, or you can order up to a full year for under $500. If you'd like to find out more about the Gold Report, log on to tfnn.com, or for more information, call our office at 877-518-9190. That's 877-518-9190.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
Hi, folks. This is Tom O'Brien. My new book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, is for sale at Amazon.com for only $18.40.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is, folks. Welcome back. This is Steve Rhodes. This is the Trader's Edge, and we are cruising into our last segment here, and time does fly. And thanks so much for being with me. I really do appreciate your time here, your presence. We've got the Dow up 65, the S&P's up 9, the NASDAQ Composite is up 31. That is the lead dog right now. The small caps are right behind it, up 8 points. Now, just real quickly, wanted to go back to Louis, who had called about OVDI, OmniVision, and really a good-looking chart if you put it on a longer-term basis. And what I wanted to let you know, Louis, is this thing has really been in a sideways consolidation going back to the March time frame. And so, you know, this thing, I know you had your stop, I think it was around 28 in the 70 area. You know, this thing could get back to 28.42 even. And I think your stop is 28.79, and the swing point on June 20th, the high there is 29.81. So I think your stop is just below that. So still seems pretty good to me, and just wanted to go ahead and follow up on that. Now let's go to who do we have on the line here? We've got guys, I can't read the screen, but just tell them we've got Bill. Okay, Bill, are you with us?
That's right. Yes, I am, Steve.
Hey, thanks for calling. Appreciate you holding on. What did you want to take a look at?
I want to look at Gold Club GG.
Okay.
Just looking to get an entry point, and I'm thinking that 46 might be a good one. Is that?
Well, you know, this also, you know, we were just talking about being in a sideways trading range, and so if you could pick this up in the 46 area, 45.89. This thing has been in a sideways trading range going back to February, and you know what I did do is I put this on a 30-minute chart. And you can see at 10 o'clock this morning, you know, we had somebody dumping shares. There were 3.8 million shares between 9 and 10 this morning that came out of this thing. and which was, you know, on a 30-minute chart, pretty big volume going back. So, you know, what it also did on the daily basis is it came right to that 0.786 retracement. You know, people were riding the elevator. That price there was 47.77. It got down to 47.84. You know, it looks like there's somebody in with a fairly large position, perhaps, I don't know if it's that large, but I'm just looking back at the March 3rd candle, where the low there was $48, and you can see it kind of stopped in its tracks right there. So don't know if somebody had been accumulating stock and they're in there supporting their position. But if I were you, you've got the gap down, you had a lot of volume. I would wait and take a look and see what happens as you get into the swing point from June 16th. If you can come into that swing point on less than 9 million shares at that 45, really 69 area, 46 area, then go ahead and take a bite of it.
Okay, so volume is the big key there, if it gets down there.
It is. I mean, when you take a look at, you know, let's take a look at the volume on the way up. The last volume that we had, volume spike we had on the way up was July 13th. And what Gold Corp did, folks, was 12.3 million shares. Now, it is almost going into noon, and what we've got is we've got 9.5 million shares. So you've got big volume that has come out of that. It hasn't made it to the swing point. You know, the problem here is this thing could be building some energy with volume to really take on that swing point and possibly even go lower. So, but wait for it to get in there. I think you're doing the right thing. Be patient. That way, you've got the right money management. You've got the right reward to risk on your side.
All right. I appreciate your help.
I appreciate you calling. Thanks so much. And, folks, you can catch my show every Tuesday and Thursday. We switch some things around here. I used to do the 12 to 1 show. I now do the 11 to 12. And Monday through Friday, Tom and I are doing a new show. We're going to be renaming. We're going to name that one today or tomorrow. That's our little baby, if you will. And thanks so much for being here with me. I look forward to seeing you tomorrow at 10 o'clock with Tom. Until then, folks, do me a favor. Do yourself a favor. Live with gratitude. Take care, folks.
Yeah, well, look at them stars and we're together. Well, it's always better when